to our latest edition of the Hot Corner Insider Strategy Session. We do this every week, Wednesdays at 1 o'clock. I am your host, Steve Straz. I'm the Director of Research here at All Star Charts. This is really my favorite thing to do each week. We're going to talk a little bit about why later, and we have a lot of stuff to talk about today. The market has been moving. It's been correcting in a pretty stealth way at the same time, depending on what stocks we're talking about. And with a month to go before the end of the year, I think, do we correct harder or do we just rip into Christmas is the biggest, question anybody should be asking themselves. So before we discuss that, nothing we discuss here today constitutes any solicitation to buy or sell any security. It's all solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, please go to allstarcharts.com/terms. We talk a lot about intermarket at All Star Charts. I'm a big John Murphy disciple. JC, our founder and mentor, also huge John Murphy disciple, big intermarket guy. I mean, we've probably talked more about the dollar than any other chart since last year. Stocks, the major averages, the growth averages like the NASDAQ, best start to the year in stock market history. We're talking about the dollar. Why? Because the correlation between risk assets and the US dollar has been as pronounced or as strong as ever this cycle. But another big one that is really worth talking about today or this week is the bond market, right? So interest rates have risen at one of the fastest paces of all time, depending on the measure, this cycle, past few years, all the way up to 5%. Cash, money market, short-term treasuries are now a very viable alternative, particularly for income investors. Right? We went from an environment that I got used to, throughout my career, which was low to no yield from the bond market, to an environment where bonds have been offering a very attractive yield. Now, there's evidence that that's coming to an end, and there's a huge implication for the broader market. Things ranging from precious metals to growth stocks, right? To commodity stocks, to the mega cap trade. All of these groups, all of these themes, very much impacted by the bond market. So the dollar fell back into its range, kind of back in the box. There are some big levels there. We'll talk more about the dollar next week. Getting oversold here today. So, sorry about that. Getting a call here. Focusing on the bond market today, I've been saying for a few weeks now, the next big move from bonds probably comes or is driven by or coincides with a break below these 2022 highs that are marked here by the first arrow. This is the US 10-year up top, the US 5-year down below. They're not going to move in different directions, right? They're not going to resolve differently. If one falls back into the box, like you're seeing the 5-year here, circled in red, the other one's probably going to fall back in the box, and it is today. The data here is half a day stale. I don't have today's candle. If I did, you would see the 10-year following the 5-year back into its old range below those late 2022 highs. Now, let's talk about those implications now. Let's talk about what this means. Growth stocks, particularly the highest growth stocks, the highest multiple stocks, companies with little to no earnings, call it unprofitable tech, they're valued based on present value of their future cash flows. Their future cash flows are discounted at the risk-free rate, which is the treasury rate. When treasury yields move in a big or in a significant way, there are reverberations that are felt due to the valuations of these stocks. So as interest rates steadily climbed higher through 2022, and you saw the longest duration equities, right? These valuation stocks, these big growth names, get not cut in half, but 80 to 90% haircuts in a lot of cases. We saw certain indexes like ARK take 80% haircuts. We saw some of the biggest growth stocks in the world, like PayPal, take 80% haircuts, right? Had a lot to do with interest rates. So interest rates now violating this key level. This was the level that we were looking at and pointing to and saying, ooh, it broke out of this range. Wow, look at that. Now falling back into that old range, like the dollar has already done. So that old headwind is now being removed. Just like the dollar falling back into its range removed a headwind. Same thing here with interest rates, right? Most stocks will do better in an environment where rates are not rising, falling. And I say it cautiously like that simply because you don't want rates cratering, because that probably speaks to larger issues in the economy, right? If the Fed has to come out, cut aggressively. This is more rates kind of peaking out, maybe making their cycle high, right? And just removing some of that pressure from risk assets. It's a very bullish thing. At the same time, this is credit spreads in black here. It's just another way to chart credit spreads. This is the high yield bonds versus treasury bonds. Been trading in a range since early last year or middle of last year. Same time, small caps, the Russell 2000, a lot of stock market indexes. Here's the value line shown in blue above. Have also been trading in ranges. Now, high yield versus treasuries or credit spreads are resolving that range now. Credit spreads are making new lows. This ratio, which is the inverse of credit spreads, is making new highs. I think, to me, that supports the upside resolutions or, range breakouts. Most of them were reversal patterns in the stock market. And I think for something like the value line or the Russell 2000 or any index, ARK, that hasn't resolved from a reversal pattern yet, seeing this move in the high yield versus treasury ratio suggests that's probably coming. It's another feather in the hat for bulls. The bond market is very much supportive of higher prices for risk assets. Speaking of risk assets, we use ARK a lot here for information. It is such a great barometer for the speculative tech trade, right? Or super high growth trade. Really, it's just the riskiest stocks, some of the riskiest stocks. So this is the ARK Internet Fund. From left to right, you see the top, the breakdown, clear downtrend. Look at that 200-day moving average in gray, sloping lower, moving sideways, now slowly curling higher. We're pressing on the upper bounds of this base, this, almost 2-year base now. I think this goes just like most bases that we're seeing in the stock market. They're all resolving higher. I'm not seeing any resolve lower. I think ARK Internet follows. We're going to talk more about this later. Today, I think we're in a weird place. I'm going to flip back real quick, just see what's going on right now. Yeah, so straight sideways since November 14th. We talk about the corrective action in the stock market. I've been opening my accounts. I've been opening my watch list in the morning. I've been doing my morning charting, and I've been saying, this is getting kind of ridiculous. The best stocks are like, they're up every day. There's just been a relentless bid for the best stocks. But shown here in the lower pane, this is the percentage of new 52-week high indicator for the S&P 500. This peaked 2 weeks ago, November 14th, more than 2 weeks ago. And a lot of indexes have been straight sideways since. Here's the Russell 2000 since November 14th. So while if we were to look at some of the best stocks, yeah, they've been grinding steadily higher. Even the S&P 500 has had an upward bias since November 14th, right? But most stocks, which the Russell 2000 does a great job of illustrating, have been just kind of coiling sideways. When we talk about breadth, do we need to see more stocks making new highs right now, today, than we're making new highs back in July? Because they're not. And is that a requirement to get a breakout, right? To get new highs here above this 4,600, 4,610 level in the S&P? Is it a requirement to see that kind of breadth expansion in order to see a breakout at the index level? I don't think so. It's not uncommon to see breadth play catch up. It's all about the price action here. Use the Russell 2000. You can look at discretionary. Equal weight discretionary looks the same. Equal weight industrials look the same. Home builders look the same. Apple looks very similar, straight up and then a little coil, right? A lot of these coils, are they going to resolve higher? If they do, here's the Russell 2000, then we're going to have a big leg higher into year end. So the Russell 2000 today, big spike. You could see it, and now a long upper shadow forming. We have another 2.5 hours here before the closing bell today. I wouldn't be surprised to see this fill back out. I think that these are very, very bullish continuation patterns, at least on the shortest time frame, right? Off of the lows around Halloween. And I'd be pretty surprised if these patterns did not resolve higher in the direction of the underlying trend. And guys, I'll get to the chat way at the end of the call. I'm dealing with one monitor today, so sorry for the screen changes. Typically, I have a couple monitors here, so I can switch screens seamlessly. Not the case today. So watch these coils, use the Russell 2000 IWM. You do want to see a more decisive breakout than what today is shaping up as, but like I said, 2.5 more hours here, I think you probably get it by the end of the day. If that happens, think of the strongest stocks that haven't really corrected and are starting to look pretty crazy extended. They're probably not falling, right? In an environment where these short-term flags are resolving higher. So Mercado Libre, one of our favorites, beautiful base. These online retailers look so good. Shopify as well. Amazon here in the US. Mercado Libre above 1,300, 2,000 all day. Record Black Friday, Cyber Monday, all that good stuff. I mean, those are fun headlines, but it's important to just, there's never not been a record Black Friday, I think, ever since we started keeping track of these numbers. It's up every year. So it's a fun headline, probably doesn't mean much. Interestingly enough, though, Shopify and Mercado Libre were up like 5% on that, what seemed to be on that headline just the other day on Monday. Visa looks great too. House of Representatives member Jonathan Jackson was active in this name just a few months ago. Getting a really nice base breakout here, call it 250, 252. Long above their target of 330. Visa is a secular leader. Speaking of secular leaders, wow, strong stock and a very strong group. Lam Research Corporation, this is a semiconductor equipment name. If we're above 730, beautiful base breakout, target, call it 1,000. Listen, if we're going to 997, we're probably going to tag 1,000 and then overshoot it a little bit. Lowe's Corporation. Not the Lowe's you're thinking of. This is an insurance name, I believe. Yeah. So Lowe's, ticker symbol L. Jonathan Locker, Form 4 filer. Just this month. Maybe he's a CMT. It looks like this particular insider is buying the breakout in Lowe's. So I love to see that. It's very rare on this list, but that's cool. 68, target 87. Insurance names look so good. And I think we do get massive rotation into financials, probably very soon. Insurance, which has been leading that sector, even if it doesn't continue leading, right? If you get rotation in the financials, they're going to be more than working. So we continue to like insurance. Toll Brothers, speaking of groups that we like, Toll Brothers, one of the more popular home builder stocks, 13G filer in this one. So this is a passive institutional stake by Greenhaven Associates. They just took this position in May. So it's not like they were at all early to the gains that have been made in this stock since last year. But Toll Brothers looks as good as anything. When we zoom it, so this is zoomed all the way out. Pre-financial crisis highs here at the red arrow, a false start, a hook higher, first targets hit. This is a nearly 20-year base. When we see 20-year base breakouts or 20-year base resolutions, very rarely is only one target hit. We'll see 2, 3, 4 targets hit typically, right? With monster breakouts like this. This is as bullish of a structural pattern as they come. So when we drill in, this is now just looking at Toll Brothers as tactical as it gets. This is the summer correction drawn in this space, right? So there's a big uptrend over here off the screen on the left-hand side coming into this from last year's lows. Pretty solid corrective action. You know, we scared people in late October, just like a lot of charts did with these new multi-month lows. Huge scoop move higher, gap, little coil gap. Now a coil above the range highs in the low 80s, right? And what a tight flag here. We were joking on the analyst team, like, did this stock get acquired? Why is it trading like this? Just absolutely flatlined, consolidating, digesting these gains from late October above its, pivot highs. Got to be buyers of this. So short-term traders, easy. 86, we measure out this flagpole that began at 69, gives you a target just above 100, call it 103. Longer-term investors, above 87, long all day 133, and after that 206. If you're looking out several years, right? We like Toll Brothers a lot. There's a couple different ways to trade this. Already talked about this one. ARK Internet, the most speculative stocks. They look ready. Not just on absolute terms, though. This is ARK Internet, ARKW versus the S&P 500. Momentum is in a bullish regime. That's shown in the lower pane. Textbook reversal pattern that looks almost identical to the one on absolute terms. What this tells us, right? So from left to right, a top or distribution, a steady downtrend throughout 21, 22, into a bottom or an accumulation pattern or reversal pattern. Well, what's next? A steady uptrend. And a steady uptrend in this ratio would simply mean that the riskiest stocks or the most offensive stocks, these speculative tech stocks, are leaders over the longest time frames. That's what this base resolving higher in this ratio would tell us. Taking that one step further, if the riskiest stocks are outperforming or showing leadership over long time frames, or the longest time frames, a couple years, right? This is a primary trend reversal, 1 to 3 years typically. Is that happening in a bear market? No. The most risk on, the most offensive stocks tend to outperform or always outperform in bull markets, right? So this would be a major feather in the hat for stock market bulls to get this breakout. And there are just so many names beneath the surface in these speculative tech groups that are working. Here's Braze Inc., BRZE. We have a institutional buyer in this one, Iconic Strategic. Beautiful base. If we're above 5150, first target 69. I think you eventually get a double in this one back to those IPO day highs in late 2021, which is basically 100, right? So again, you'll probably overshoot. Coinbase, be patient now. Be patient. I'm out of my calls as of Monday. There will be more calls in the future. Still holding my comment. Obviously, I'm going to be holding my comment for a very long time at this point. I think next stop 160, but RSI way above 80. It's been above 80 for a while now. Patience here. This one will need to digest gains at some point. And typically when it digests gains, right, we've seen this in the past, huge reaction higher, big sell-off, huge reaction higher, big sell-off. Over here in 2022, huge reaction higher, right, big give back. So don't be surprised. And if you're a long-term investor in this one, don't give up on it if you get a big correction here. Coinbase has nearly doubled since last month. MicroStrategy, MSTR. Listen, I was just laughing with Alfonso behind the scenes because we got long this one at, I think, 135 earlier this year. It was a short squeeze name. We did go diving in a number of these types of stocks at the lows. Shopify was another one that we were in very early. DraftKings, Uber. MicroStrategy, we were in at 135. I think we've already had 2 targets hit. 500 or right around 500 was our most recent one. And we're coiling here. Just like Bitcoin and most cryptos have been coiling. MicroStrategy is coiling. That makes sense. No need to be cute here. Take it back to the old highs. I think because this was such a blow-off high in early 2021, 885 is really the level for those old highs, right? So 500, 885. If you want to be more aggressive, you could probably measure out this base. That'll take you back around those real old all-time highs from early 2021. Either way, the point is the reversal is very much in. The path of least resistance is higher. If you think it's a new bull market for crypto and you think Bitcoin goes on to make new record highs, we're not going to be talking about, MicroStrategy at 800 or 1,000. Probably going to be talking about it much higher, right? Because again, it's a leveraged Bitcoin play. We think Bitcoin doesn't just go back to its old all-time highs. We think well into the 100,000s, right? So that's going to put MicroStrategy very much into the thousands as well. And then this is important to think about, right? Before we jump in and talk about Coinbase here, or oops, I got these backwards. We already just talked about Coinbase, but when I say, be patient with this one, Bitcoin's gone sideways. If you, God forbid, don't get an upside resolution from this coil in Bitcoin, which I think we probably will, right? But Bitcoin's been straight sideways pretty much all month, while Coinbase has been higher. And Bitcoin, I'm just using as a proxy for the entire crypto space. Most cryptos have been digesting. Sure, the leaders have been moving higher, but even if you look at Solana, Avalanche, right, a lot of these altcoins, coiling past few weeks, Coinbase has been moving straight higher. If these coils in crypto resolve higher, I don't think Coinbase is going to be falling. As extended as it is, it probably continues to march higher. We've seen this before. But if these coils in crypto do break lower, even for a day or two, right, or head fake lower, you get any sort of downside move from these cryptos, a chart like Coinbase that has just been a nosebleed uptrend, probably going to give back a good amount, right? So don't get spooked out of it. If you're a longer term bull, I don't think this is the place to enter tactically. Like I said, I was selling calls or closing out my calls earlier this week. But I don't think you want to throw in the towel on it on a steep correction because we've seen it before in Coinbase. So just a heads up. Cybersecurity. We've loved this space. Been pretty loud about it for a couple months now. We see this all the time. So cyber's been like straight sideways since June, highlighted in this gray highlight here. But as that was happening, late summer, all of a sudden you saw some pretty notable relative strength, then a little sideways, and now more relative strength, new highs here this week on a relative basis. So very much confirming the new highs on an absolute basis. And it's just something that we see all the time where, in sideways markets, it's the ones that maybe are correcting in the most resilient way. And if you just look at the relative trend, which is shown here in the bottom, right, it can reveal really important insights. In this case, it was, oh, wow, look at cybersecurity, even though it's just sideways, on absolute terms, cybersecurity is really accelerating higher versus the broader market. Okay, then once this consolidation, broader market was going sideways for most of the summer. Once this consolidation or corrective action kind of passes and we're breaking out, that leadership is going to remain and usually accelerate. So that's what we're seeing from cyber stocks. We like them a whole lot. There are so many. If you're a premium member, you can go to the Trade Ideas page or Rangefinder and look at all of our cyber names. We're long pretty much anything that looks good in this space right now. CrowdStrike is one of our favorites. CRWD, we're already just about hitting our first target here. Got the base breakout. I think this one goes all the way back to those old highs. So 297 would be the next stop, and 219 is our new floor. Datadog, wow, another one. And this one's really, really ripe right here. I think we're getting the breakout pretty much today. We are breaking out above this resistance zone that I've drawn really nice and thick here in gray. So call it 114, 115 if we're above there. Listen, I think it's cute to patterns like this, primary trend reversals like this, to take profits here when you're only halfway back to those old highs. I think you're selling yourself short a little bit. We're in a, what seems to be, by all the evidence that we have, a sustained new bull market. So forget 147. I think we go all the way back to 200 in Datadog. Roku, not cybersecurity, but speculative tech. The base, the reversal, it's in above 98. First target 158. All we're doing there is measuring the base, right? And look at that 200 day. Just crashing lower, indicating a downtrend. Monster rounding bottom. 18-month trend reversal pattern here. Just this week, resolving higher with authority, mind you. Really, really bullish candles past few days. So 98 is that line in the sand. When you get these breakouts, sometimes they don't retest, they run away on you. So, we're 8 points above the breakout level here today at about 106. The risk reward math still very much works with a target of 158. And again, if you zoom out and you start looking at those old all-time highs, that risk reward math only gets better and better. Alamos Gold. We've done the spec tech thing. Now let's talk about some other groups. Gold. Almost ready. It looks like it's almost ready to break out of this range, right? Alamos has been the leader. We got long around 10.50. First target already hit. It continues to lead. It's breaking out now to new highs when pretty much no other gold miners are. If we do eventually get a sustained, new bull market in gold and get a resolution of this multi-year range, you want to be in the leader, and this is it. So AGI 14, long above there, 50% back to 21, the highs from the 2011, 2012. Skechers. Some of these shoemakers, wow. SKX. Clean breakout here. We've talked about this one before. It wasn't ready. Maybe it's ready now. The point is almost a 10-year base. So if we're above 54, target 77, I do like Skechers. I like anything that looks like this. Nice chart. GoDaddy. This is a weird one. Just like super tight for 5-6 years now. So we're just measuring this base out. 58, 89, get you to 120. It's resolving higher in a big way, right? The momentum is definitely there. You could draw this in a number of ways. Draw a little downtrend line here. Point is, it's coming off a big uptrend, and then it's gone sideways for a very, very prolonged period of time. Tend to get some nice reaction legs higher. It looks like one is already underway now. KKR, don't sleep on financials. Insurance stocks, asset managers, broker-dealers, I think eventually banks. I think banks soon. We're talking more and more about banks on here. I'm going to leave you with one before we finish today. But some of these other groups are already working. So we talk about these reversal patterns, right? Primary trend reversal. This one's been in place. We got a little shake and then just a massive move higher from KKR. It's a big company. Can't check the market cap, but it's not small. Blackstone looks good. A lot of them look good. So, I think you can be creative and start to look around in financials. I think it is a pond that we'll be fishing in a lot more next year, but you can jump it a little bit because there are leaders there that look just so good. Some of the financial tech stuff, financial data stuff, these ratings companies, a lot of this stuff looks good. CME, SIBO, not Interactive Brokers, not this week at least. Okay, so 67.75, target one in KKR, but you really want those old highs. 84. And this is Merchants Bancorp, the CEO of Merchants Capital, a subsidiary of Merchants Bancorp. Inside buyer in this one earlier this month. $250,000, not nothing, but look at the massive base here. This has been a really strong bank for years now. MBIN, we're above 33.50, those late 2021, early 2022 highs, also the July highs. So a lot of price memory there. We're above 33.50. You got to be long Merchants Bancorp. 40.80 would be our target number one. But like I'm saying, we enter an environment where we're looking for more financials or even banks to buy next year. You can kind of jump that theme, get long this one now, because leaders tend to keep leading, and this has been a clear leader. So, guys, I'm going to flip to the YouTube chat. Excuse me, because you're going to have to see my YouTube screen when I do it. But as always, questions, comments, concerns, want to say hi, talk about the market, info@allstarcharts.com. You know how to reach me. Let's just see this real quick. Yes, so hot right now, Mary. CRL is tomorrow, Curtis. Tuesdays and Thursdays. We don't do the opposite of hot corner, but that's a great question. So Curtis is asking, what is the opposite of hot corner? CEOs, founders, hedge fund managers have a million reasons to sell their positions, right? We're not really interested in that. That's a tough game to play. For example, ask Jeff Bezos why he's selling shares right now. It's not because he doesn't think Amazon's a good long-term investment. Definitely not that, right? So you see a lot of that. And while it does mechanically put pressure on a stock, when you have a big seller like Bezos, Elon Musk, like a founder selling, it's worth paying attention simply because that much supply being put on the market will drive prices lower. But what we're really looking for here is some sort of signal of conviction, right? So a CEO or a CFO or an institution coming out, buying shares on the open market, building a big position, building a stake, because there's really only one reason to come out and buy as an insider, and that's to make money. Insiders will come out and sell for a whole myriad of reasons. So we don't do too much work on that. DraftKings CFO sold 27 million. Maybe his daughter's having a wedding, right? I don't know the DraftKings CFO. Do you know the DraftKings CFO? Maybe he just made so much money because he was buying at the lows last year, which is why it's on our list, that he's taking some profits. I don't know. Send me the filings, Curtis. I would love to take a look. How about the action in PSX? So Phillips 66, I believe it was a new stake. I saw Elliott, right? Paul Singer. So it was Elliott Management. They've been active. They've been buying a lot of different stuff. Haven't seen them in oil and gas. I know they're big in Pinterest right now and doing a lot of work there on the board and whatnot. But yeah, Phillips 66. So they're buying an oil refiner. It does stand out. It will be on our list. We'll talk about it in the future. Energy stocks, kind of like what I was saying about gold, though, probably need more time, right? Probably need more time. Yeah, UiPath looks great. I got that one. If I had two screens right now, I would show you. We've been talking about it in the chat. That is an ARK stock. That's an ARKy name. I think it's ticker symbol PATH. But that base and PATH looks a lot like Datadog or some of the other one, CrowdStrike, right, that we were talking about on our call today. So yes, very buyable. Toll Brothers, they have finally made a move after being sideways for a week. What a tight coil in Toll Brothers. Yeah, looks great. Yeah, wavy bond market is so important right now. Those are big levels. We're watching them closely. Totally agree. Is ARKW the best base? Probably not. Here's the thing. The bear market of 2021 and 2022 ushered in some of the most textbook technical action I've ever seen in my career. Like these bases that have been forming since Q1, Q2, Q3 of last year, depending on the group, are just like, it's the way that they teach a trend reversal in the TA textbooks, right? Like they take time, they build out, you slowly start to get higher lows, then you get a breakout above a key resistance level. The 200-day moving average has transitioned from down to sideways to higher, but they don't always happen that way. In fact, I would say they unfortunately rarely happen that way. Look at the 2018 bottom. It was a V. Look at the COVID bottom. It was a V, right? This is the way they taught us markets or stocks are supposed to bottom since last year. So technical traders or technical investors should be buying these breakouts hand over fist. Great bases. So ARKW, probably not the best base, but one of a million good bases right now, I guess is my point. Dollar due for a dead cat. Yeah, but it's got a lot of work to do, right? If a dead cat really would mean very little to me, it would have to re-clear those range highs, right? And look as if it's a reversal pattern. Again, for now, it looks like a failed reversal pattern. So we'll be watching that very closely, trust me. I tried to take a break from the dollar today, by the way, guys. Just so you know, that was intentional. We talk about the dollar so much. Oh, make Canada great again. I'm a fan of that, man. I love Canada. Thanks for enjoying the show. I love you guys. Rachel, obviously one of my favorites. Rachel is she's like the teacher's pet. We favor Rachel here. Just like we favor tech stocks. CCJ, yeah, Carter, it's awesome. Uranium stocks, it's a secular thing, right? It's almost I'm telling a lot of my friends and family members, just buy these stocks on weakness right now, right? Uranium stocks, sure. If they start coiling and offer up some, sweet continuation patterns that I think we could trade technically, we'll talk about it. But really, the way I'm viewing uranium is this thing's going to go on for years. This is a massive structural trend reversal. Sentiment is there. The fundamentals are there. If you know anything about what's going on in the energy sector, not just here in America, but all around the world, particularly developed Europe too, uranium is just a really big deal. And I think a mega trend right now that's worth getting behind. I think you could buy weakness in these names, CCJ and NextEra or NextGen Energy, NXE, probably top of class, right? The industry leaders. And also, I think there's a very buyable ETF there. And sometimes with these commodity trades or energy stocks, natural resource stocks, it's tough to pick the winners, right? If you are going to play that game, make yourself a little basket, right? And say, I'm going to allocate this much money to uranium. I'm going to buy 4 of my favorite names. Uranium Energy, Uranium Fuels, UEC, UUUU, Denison Mines, and Uranium Royalty. That's probably a bad list. You definitely want to sprinkle in one of the industry leaders. But my point is, always build a basket, because God forbid you buy the wrong one, or you buy one with balance sheet issues, or you buy one that has a failed new project or nuclear plant, right? That they maybe over leveraged or didn't build the right way. You don't want those company specific problems when you're making a secular bet on an overarching theme, right? So if you want to make a bullish bet on uranium, don't try to be a hero and then also have to pick the right uranium stock. Just buy the basket. So I think URA is a great option for something like that. And it's really sad because I feel the same way about coal in many regards right now, but we no longer have an ETF for coal. So the way you would do something like that is just sprinkle it into a couple different names. DraftKings we like a lot. Listen, be patient with these names. They've gone a long way. And watch the morning show from this morning. Last 5-10 minutes, I talked about DraftKings and the way that I'm viewing it right now. I think a lot of the easy money has been made in DraftKings. If you ever want to use that phrase, easy money, which I don't love, but easier money was probably already made in DraftKings. It's approaching those old highs now. Peloton, nah, fuck that. Don't like Peloton. There's so many good looking things right now. And just, as a chart watcher and a technical person, that doesn't mean you have to stop thinking, right? Like Peloton is just a tough one for me to wrap my head around. It's like these buy now, pay later stocks. I don't care even if the chart ever did look good. Peloton's just not a stock that I'm interested in. RUUF is, I think that's that Sprott, the Sprott Physical. Yeah, listen, spot uranium looks great right now. You're probably going to get more beta, more juice in the actual companies though. Even the leaders. So I think CCJ, NXE, look at NXE right now, trading at those range highs. When that thing breaks out, what a buy that is. All right, guys, this has been fun. We've gone almost an hour here. I think we just made a new record today. I'm happy that I'll be back in my new office. I didn't get any compliments about my nice new white walls. I got rid of the green because everybody hated it so much. And now my feelings are just hurt because nobody has said, oh, I love the new color. So that's fine. JC as well, JC included, probably the biggest critic. But anyway, guys, again, questions, comments, concerns, want to say hi. info@allstarcharts.com. Join us every morning, 8:30 to 10 o'clock on Stock Market TV for the morning show. And join us here every week. My favorite thing to do. Love hanging out with you guys. 1 o'clock, Hot Corner Insider Strategy session every Wednesday. We'll see you next week.